Hello everybody, my name is Radovan Vojtko, I'm CEO and the head of research at Quantpedia. Today I would like to discuss Pragmatic asset allocation model. Pragmatic asset allocation model is our own model. It was described in our blog, in SSRN paper. You can find it easily on ssrn.com. It's one of the popular global tactical asset allocation models. I will not go in the details. If you are interested, you can check out the whole methodology. Just very quickly, we have investment universe that consists of 3 risky assets. It's a Nasdaq 100 proxy, MSCI All Country Index proxy, and emerging market proxy. And we are rotating among those risky assets. We are trying to pick which is the best performing one and investing in this one. And in case there is a bad situation for investing in the risky assets in overall, we have 3 assets that are hedging assets. It's a US 10-year treasury bonds, in the form of ETF, or gold or cash. So we have 6 assets in total, and you are investing either in those that are performing well and are risky, or you are investing in those that serve as a hedge. So the whole methodology is explained in the article.
Unlock the power of Quantpedia Pro with over 900 premium strategies extracted from 100,000 research papers and more than 30 quant reports. Model full portfolios, generate real-time reports and save hours of work. Quantpedia Pro, your edge in quantitative investing.
The model is approximately 2 years old, so we built the model in 2024, we published the paper, and we have independent report in the Quantpedia Pro, in which there is a performance of the model, drawdown chart, what are the actual signals, etc. The model is very slow moving, so you are rebalancing portfolio only once in a quarter, so it's absolutely great for somebody who is like semi-active, is not a trader, but on the other hand is not very comfortable with just buy and hold, so buying and holding something without touching it for 20 years. In the case you would like to rebalance the portfolio approximately once in a quarter, this is absolutely great model for you. Why I'm discussing this in this video? Because approximately a month ago we wrote an article and what is the actual performance of the model, how it performed over the last 2 years. We had a lot of the cycles in the last 2 years, we had a lot of the risky periods, a lot of the volatility on the market, so we can compare it and we can check out how it performed compared to the other assets. What is the performance in the out of sample? So in the out of sample we are beating the benchmark. So our benchmark is MSCI World. So that's the benchmark that we set to ourselves. Why not S&P 500? The reason for that is because we see S&P 500 as a little risky. We are also located in Europe. Having the S&P 500, US stocks as a benchmark is not very appropriate for us. So we are having the benchmark, the MSCI World, the world equities, which is a significantly better benchmark. The red line is the performance of the benchmark itself, and the blue is the performance of the model. As we can see, model performed significantly better in the out of sample period in the last 2 years. So firstly, the drawdowns in April 2025 or at the end of the year, they are not so bad, they are significantly better. The model is not having drawdowns as the market itself. One of the reasons for that is because the model was holding the gold. The model had significant position in the gold over the last 2 years. We sold the last position in the gold at the beginning of the year. The reason for that was firstly that the gold is overstretched, and the second that equity markets are not performing bad. So of course they are in the last stage of the bull market. However, the last stage of the market still makes sense to hold the equities. What is the forward-looking allocations? At the end of the February and the March, the model was recommending us to hold small position in the QQQ, and then like 50% of the portfolio in emerging market stocks and the rest of the stocks in the MSCI World. So actually the model is preferring the emerging market stocks and not the US tech stocks. It makes sense because firstly, emerging market stocks performs better in the last 6 to 12 months, and secondly, the tech stocks may be a little too risky because once again they are overstretched. So it's better to have at the moment the MSCI World or emerging market stocks than just QQQ. Then we check the model. You can take the model, select the model here in the portfolio analysis. The model equity curve is directly accessible here. Also the code is accessible here, so you can select it in the portfolio analysis section. On top of the model you can run all of the reports that we have, and one of the reports that we ran was equity market phases framework or equity market phases analysis. That report is checking what is the performance of the model in individual phases of the equity market, in the bear market, in the recovery, in the bull market, in the correction. Where are we at the moment? At the moment we are at the top of the bull market, so close to the correction, but we are not in the correction yet. We will be probably there soon. And you can compare, how any model that you select from our database, how it performs in all of those stages. What we can see, how the pragmatic asset allocation performs is that, in the bear market, we have significantly lower drawdowns, also in the correction than the market itself. Of course, we have a lower performance in the recovery and bull market, but in overall, you have smoother equity curve. That's the reason. And the reason why it is so is because the model rotates and it doesn't hold just equities, it rotates also in the other assets. So this is how the performance looks like. Another thing that you can analyze when you select some model or any model from models that we have in our database is how does it perform when there is a stress. Stress is tested in one-day shocks and extreme market events report. In this case, we have a history of wars, geopolitical conflicts, crisis periods, etc., etc. And in those cases, you can check out what is the performance of the equity market itself and what is the performance of the model itself during those periods. What we can see is that firstly, the equity market has significantly higher volatility than the model itself, and the model itself has a faster recovery after there is a crisis. So that's the reason why we can be confident and we can be fine holding the equities even now, because in the case something happens, the model will sell off those equities from the portfolio. So I just wanted to show you how does the pragmatic asset allocation model look like, how you can test it, how you can test any other model in a Quantpedia. So here are a lot of the reports that you can use to check out the performance over the different cycles, performance after the crisis. And I wanted to touch how the model performed in the last 2 years, and we are extremely happy with the performance of the model and behave really, really well because it was able to sidestep drawdowns in the past year and a half by moving out of the equities, moving into the gold, and right now is out of the gold and once again moving into emerging market equities, which is probably the good bet for the next few months or few quarters. We will see how the model will rotate itself in the next quarters. It's very highly probable that we will maybe revisit the performance and we will revisit the model in the next 6 to 12 months period, and I'm really looking forward how the model will behave. We will see what the future will bring us. So I hope that you like this big and short video. If you are interested in the global tactical asset allocation models, feel free to go to screener here in the product page. Into the screener you can select keyword asset class picking, or you can select keyword trend following, but it's better to select the asset class picking, and then you can select instruments ETFs. In our database will give you over 50 global tactical asset allocation models that are trading ETFs either monthly or on a quarterly basis. They are trying to rebalance the portfolio, and our pragmatic asset allocation model is one of them. But you don't need to trade it, you can trade other 50 models and you can pick them out, or you can find inspiration. I hope that you liked this video. If it is so, please give us a like, subscribe to our channel, and once again, if you are interested in models like pragmatic asset allocation, we have more than 50 of them in our database. Thank you very much.
Are you interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.